Oh man, so some new data has just come to light, indicating that the Terra Luna collapse could indeed have been an inside job. I'm going to be sharing that with you. I'm going to be looking at the Bitcoin charts. We've got a whole bunch of interesting updates and loads of alpha jam-packed into this short video for you guys here on a Friday. Smash up the like button. Don't forget to subscribe. This video is brought to you by BITGET. BITGET are offering a new copy trading platform, which I'm definitely going to spend a lot more time showing you guys. Really interesting feature where if you don't have the time or the knowledge to trade, there is a smart way you can jump onto the back of other experienced professional traders and take a percentage of the portfolio that they're building out. So definitely something for you to check out. Links in description. They are actually offering 10% discount, cashback on whatever you deposit. So you go ahead and deposit $1,000 today, you're going to get $100 back, but you still have $1,000 in your account to trade or buy cryptos with. Absolute no-brainer. My link's in description. Get yourself set up. But Bitcoin, Bitcoin, Bitcoin. Let's start with Bitcoin before we move on to this crazy news about Terra Luna. And Bitcoin, we were forming this head and shoulders pattern, and we were worried that we were going to get it invalidated at one point. You see this where we fell down here from the trend line? It looked like we were going to lose this head and shoulders pattern, but then a really big pump here on Bitcoin allowed us to get back to the neckline. And now you can see we're kind of just dancing along this neckline now. In order for this to be a trade you'd want to take, and by the way, if you did break out from this trade, the price target, if I show you this as a measured move, very roughly here, if you go from the point of breakout, you'll be looking at this getting Bitcoin back to the 26,000 mark from a technical perspective. Obviously, we're going to need to marry that over with the macros, which I'm going to look at shortly. And in order for this to validate, not only do you want to clear the neckline, but you want to get above this previous high here. So really, you're going to get confidence and really add to your position and scale your position in after 21,683. You want to see some hourly closes above that, and then you can take this move. Definitely not now, because from this point on, before you've cleared the neckline, never be over ego with a trade. This could easily be thrown back down to test the bottom of the right shoulder at 20k, right? So this is a precarious position where we're kind of in a bit of a no man's land, and we need to keep an eye on whether we go break here, in which case fine, we can start to go long if we go above this level, or are we going to curl all the way down here? That's what we need to keep an eye out here on the hourly. Now, actually, I'm going to stick to this chart, but I'm actually going to switch it over to the 4 hourly. I'm going to show you why. I'm going to switch it over to the 4 hourly, excuse the messy graph, and I'm going to bring out the EMA ribbon, but allow me to zoom in. And the reason I want to do that is we're trying to decide, is this going to go here and create that higher high and then move us towards our price target of 26,000? But as you can see, the EMA ribbon is acting as resistance. Just like it did here, and we predicted that perfectly when it formed the right shoulder, we saw it act like resistance. We knew we were going to head to the downside. Similarly, we had confidence we were going to break out of this trading pattern here. So now, is the EMA going to act like resistance, or are we going to have a catalyst which breaks that EMA ribbon and gives us a close above the 4 hourly candle? So that is why it's so important. If we get that close above this candle here, okay, and I'll show you the exact number. If we get above about 21,600, like I said, that's going to be really bullish, because it means you would have printed a few 4 hourly candles above the EMA ribbon, which means on the 4 hourly, you are now bullish. That'll be a very interesting situation to see. But again, the most likely scenario is we get rejected off our EMA ribbon and to the downside. So we have to trade with the trend. When you're going anti-trend, you have to be extra cautious with that, okay? So that's what we're seeing on Bitcoin. Now, a few other interesting points to cover off. Now, don't forget, guys, today we get some really important economic data. I know that can be boring, but it's very, very important. We get new homes data, and we get the Michigan consumer sentiment. That's going to be really important, because the Michigan consumer sentiment, the preliminary data when it came out, was what Jerome Powell used to increase his rate hike from 50% to 50 basis points to 75 basis points, okay? So it's going to be interesting to see what does the actual number come out as today, as well as the new home data. We'll be looking out for that as well. If we take a quick look at the S&P, let's do that as well. Now, what you can see here with the S&P is just removing this line and going over to the daily, taking off our EMA ribbon. Let's just take off this EMA ribbon. Now you can start to see the levels we're at. And really, the testing level is, are we going to go all the way down here to the pre-COVID levels? This was the pre-COVID level, sitting here at about 3.3, call it 340 here on the S&P. Is it going to want to visit down, or are we ready to recover from where we're at? That's the macro question, right? Are we going to fall all the way to those support levels, or are we ready to bounce? Unfortunately, I don't think we're ready to bounce. And there's a really interesting quote here from a senior market analyst. I'm going to read it out to you. Recession talk remains the focal point on Wall Street, and that means whatever stock market rebounds emerge will probably be short-lived. Wall Street won't have any answers anytime soon for the questions on when will inflation peak, how soon will we see a recession, and how high will the Fed raise rates. Okay, so very, very important. This is the message I've been trying to drive home over the last couple of weeks here, is let's not get excited, as over the last couple of days, sorry, let's not get excited about an emergency rebound right now. We're still in our dropping phase. We're still in this recession slash deep recession, or whatever you want to call it, this downturn. We're still in it. So for us to prematurely say, okay, we're heading back up, you can get yourself in a lot of trouble. So it's really important that we understand where we're at. Inflation's at 8.6%, a 40-year high. Sentiment is falling, right? Inflation is rampant. We're seeing this. And so we need to address it before worrying about have we bottomed out. We haven't quite got there yet, in my opinion. Okay, let's also take a look at a few other interesting things. The first I want to share with you is the Bitcoin dominance. So we're seeing Bitcoin down 1% today. We're seeing altcoins still a little bit green. I mean, I'm looking at Solana up 1.67%. I'm looking at BNB up 1.8%. I'm looking at Avalanche up 5%. I'm looking at Phantoms fairly flat, but up 1% against Bitcoin. You've got Near Protocol up 5%. You've got ADA up about 3%. Rune up 0.7%. We got an update on Rune to give you guys as well. So we're seeing altcoins move today is the point I'm trying to make. And when you come onto here, you can see now that over the last kind of 10 days, dominance really has been falling. I mean, we've fallen here quite significantly from 48% to now 43% levels, which is very, very interesting. And definitely something which shows that there is still a little bit of excitement in the market, which I want to see drowned out before we can run to the top. And I know that sounds horrible, but remember, you're not at a bottom, whether it's stock market, whether it's crypto market, you're not at the bottom until there's peak fear. We're not quite there yet. It feels like we need another dip down to 17,600 before we're ready for that. And if I'm wrong, great, right? There's no harm in us going to the upside, but I want to be prepared that if we do get that dip to the downside, we're not caught in crazy positions. We have dry powder ready to buy those dips, and we're ready to go again thereafter. So that's really, really important for us to take a look at. Okay, so keeping things moving, I do want to share this chart with you guys as well. And what we're looking at here is this is the realized losses on Bitcoin. As you can see, a new all-time high spike on realized losses, as you can see there, really, really climbing up, and just goes to show that people are selling Bitcoin at crazy losses right now, and they are, and that's good. That's, well, in terms of coming to a bottom, that's a good sign. It means we're close, but it doesn't mean we're quite there yet. Maybe that can still continue to spike, but people are selling their crypto at a loss. We are seeing that. THORChain, interesting update. Let's just bring that back. I accidentally closed it. There you go. THORChain Mainnet goes live on 7 networks. Rune spikes. We saw a green day yesterday for Rune. They finally gone live with their mainnet. It's going to support Bitcoin, Ether, Binance Coin BNB, Doge, Litecoin, Bitcoin Cash, and Rune. As support for Cosmos and Avalanche is expected shortly. Okay, so good update there for anybody invested in THORChain. I've made a video about that. I'm going to try and link that up for you guys. If not, just search the channel for my name and THORChain. I did make a video on the potential of THORChain. Also, Harmony, interestingly, another one. DJ Khaled, another one. We have another exploit, right? $100 million in exploit, and the Harmony 1 token dumps. Again, this is another layer 1, guys, and their bridge has been attacked for $100 million, and the FBI in the US are helping, along with other legal enforcement, to see if they can find the attacker. Now, what's the lesson we want to take from this, guys? This has been a long year. 2022 and 2021 have seen a lot of bridge attacks, right? And this is why it's really important. If you're using any bridges, I don't want you guys to leave money. In fact, let's zoom out a little bit more. What have we learned? What we've learned is outside of crypto in your hands, nothing is guaranteed. Fair? If you don't have crypto coins, which you own the tokens and you own the keys, it's on your wallet, nothing else is guaranteed. Exchanges have not been guaranteed. Lending platforms have not been guaranteed. Stable coins have depegged and not been guaranteed. We're going to come on to the Luna thing. Don't think I forgot. And also, we've seen that bridges have not been guaranteed, whether it's wrap tokens on things like bridges. These have all failed. We've seen stake depeg, right? So again, non-assets, any of these things. It's a trend for a reason, guys. In a bear market, they've all failed, and they failed hard. Okay, so very, very important. If you're using bridges, if you're using wrap token, do so as a means to get to where you want to go. Like, I know I have to use stablecoins sometimes to get to where I want to go, but I'm not just sitting on an abundance of stablecoins for no reason. Either I'm in fiat. I know it sounds horrible because people want to get away from fiat, but either I'm in the fiat dollar or pound, or I'm going to go quickly into my stablecoin to get into the crypto I want to get into, take it off the exchange, and that's how you should transact, right? That's the right way to do things, and that is what's proven in a bear market. You cannot have an overabundance of caution in this type of bear market. Companies are struggling left, right, and guess what happens when companies are struggling? Their backs against the wall, and they start doing some shoddy practices. Okay, and here's an example of exactly that. This is what you guys wanted to hear about, and that is the wallet that helped trigger the UST implosion is linked to a Terra developer. Yes, so here, very, very interesting. A South Korean blockchain analysis firm, Uppsala, they've done a bunch of research, and they found that the wallet address that started off the triggering that caused the UST to implode was linked back to a Terra developer. Very, very interesting. Let's go through some of the highlights here. Uppsala Security conducted analysis of Terra wallets and flagged the Ethereum wallet as one of the main addresses whose actions helped push prices of UST off its intended $1 peg. Blockchain data shows Wallet A swapped over 85 million UST for another dollar-linked stablecoin USDC on May the 7th, just minutes after Terraform removed 150 million UST from a liquidity pool on the lending platform Curve in a planned move. Remember, we covered this off in detail, guys. If you want to go back and watch the drama unfold, there were 3 or 4 really interesting episodes I did literally as it was unfolding live around the Terra collapse. And these are some of the things we were thinking about, right? Particularly towards the end, we were saying, why is Do Kwon not being transparent? Why is he not telling us what happened to his Bitcoin reserves and where did it end up? We tracked it all the way to Gemini accounts and Binance accounts, but we couldn't see who actually got away with it. We also know a whole bunch of the Terraform employees are on a no-fly list, so they can't even escape the country, which is very, very interesting. And I think this is just the start. We're going to hear a lot more about this going on, and we just don't know what happens, right? Oh, look, here you go. There's no telling what happened to the funds, transferred to these Binance and Coinbase wallets, whether they're still there or have since been transferred somewhere else, Uppsala wrote. So we don't know where it's gone. And this is interesting because, you know, I would not rule this out. You guys can go read this full article here. Very, very interesting. But I would not rule out whether this was a little bit of an inside job. So definitely going to stay tuned to hear more about this as it unfolds. But in the market, guys, what am I doing right now? I'm holding fire. I'm not buying right now. We're sitting here at 20,000. We're sitting on the close of inverse head and shoulders pattern. For those of you guys who want to trade it, I'm going to trade that move if we get a confirmed breakout on the head and shoulders pattern, but you don't have to. If you're focused on dollar cost averaging, don't chase the green candles. Wait for another potential dip, because even if we do break out of this head and shoulders pattern and work our way towards 26, I know it's, again, I'm sounding like a perma bear, but again, I don't actually think we're going to then run on to 30 and onwards. I think even if we do get to 26, 27, I think we're going to have our next drawback down, and you guys can wait for those pullbacks in order to add to your long-term bags. That's what I'll be doing as well. Again, not focused on small market cap projects. I know that could be a mistake from my perspective, because you've got some crazy prices on small market cap projects, but I just want to keep myself focused on Bitcoin and Ethereum, and that's not going to last. I will bring back the altcoins and start adding to those, and I'll make it very clear when I'm doing that. But for now, I'm just keeping my bandwidth focused on adding Bitcoin and Ethereum to make sure I've made the most of these opportunities. Hope you guys have smashed up the like button. Don't forget to subscribe if you appreciate this type of content. Let me know in the comments, guys. Don't forget, check out BitGet. Their copy trading feature is insane, so do check out the link in the description. Get yourself 10% cashback as soon as you deposit, which is an absolute no-brainer. And I'll see you in the next one.